morning and welcome to the 859 Water, Waste and Energy Committee meeting of 09 September 2025, and I declare the meeting open at 9:01 a.m. Big welcome to our committee members, our visiting councillors and of course our hard-working city officers and chamber staff. Just a reminder that our meetings are open to the public and are live streamed, so we of course welcome any of those joining us from home. Item 1 is attendance and apologies, of which there are none. Item 2 is leave of absence, of which there are none. Item 3, confirmation of minutes. Minutes of the 858 Water, Waste and Energy Committee meeting held on the 12th of August 2025 are to be confirmed. Do I have a mover for that motion? Thanks, Councillor Wilkinson, seconded by Councillor Young. All in favour? And that motion is carried. Item 4 relates to conflicts of interest. Do any councillors have a conflict of interest to declare against any of the items in today's agenda? No? Excellent. Item 5 is the committee forward planning schedule, which I know is currently starred. If there are no questions related to that one, we'll deal with it and start items. Okay, councillors, last week officers held both a number of group and one-on-one sessions covering off on item 7.2, so councillors have already been provided that presentation. The item is required to be discussed in closed and it will not be streamed. So are there any objections to that item being starred, or are there further questions? Okay, we can leave that one open. So the ARRC one. So that one's going to be left unstarred, which means the only starred item is 5.1. Can I have a mover for that? Thanks, Councillor Young. Seconded, Councillor Wilkinson. All in favour? And that is carried. Item 6.1, the Water, Waste, Sewerage Services 2024 to 25 financial report, and I believe there is a presentation. Thank you, Michael.
Through you, Chair. Thank you. So obviously we do a deep dive post each financial year on the performance of each of our commercial business units, both on the agenda today. We'll start with Mark and Victoria providing a run through some of the key highlights and challenges from last year for our water and sewer CBU. So I'll pass over to Mark.
Through the chair. Thanks, Michael. Thanks, Councillor. Now, I will be doing a bit of a tag team here with Victoria Clancy. Victoria's our finance business partner for the commercial business unit. So you'll see her twice this morning. She'll be helping me with this presentation, and then she'll be helping Chris with the waste presentation straight after. So that's how we'll roll this morning. Now let's get into some highlights for the so we've followed the same presentation format as last year and some of the major insights for this year. So there's been a very significant capital program in the water business this year. You can see we've delivered $270 million worth of $207 million worth of capital, which is a significant number for that business. Residential bill increase. So coming into last year, it's important to note that the bill increase was only 2.2% last year, in line with the bulk water price. So that was a very modest increase coming into the 24-25 financial year. Approximately, now this is one thing that we've been talking about through the monthly reporting that comes up, and it will carry through into this report. There's been an $18 million increase in the reactive maintenance and condition assessment. We've been doing a lot of work, primarily is instigated by the B35 spill and then some subsequent spills that happened there, but we've been doing a lot of work in the water business focusing on our wastewater network and a lot of condition assessment in that space. And that's part of that's the bottom dot point there about the enforceable undertaking we've now entered into with DETSI, and we're working through that. And all of those things are good things, but additional things for the business for us to be working on. Future outlook. One thing that we want to highlight here, and it'll come through in the financial presentation, is that the reserves are depleting. So we are going through a spike in capital at the moment. We've got all 4 of our treatment plants are undergoing capital works at the moment, and that is drawing down on our reserves. This is something that we have in in our financial model, and we have it allowed for, but it is important to note that we're going from a part of the council that had reserves in the bank to we're actually taking out our loans in the coming years to fund our capital program. Now, there's always one big loan in the water business, so that came about from the when we came back in from Allconnects. There was what we sort of refer to as the establishment loan, and that loan is a loan between council and the water business, and that gives a steady return to the council from the water business, and you'll see that in our financials later. But these are actually new capital loans we'll be taking out to fund our capital program. You can see, second dot point, the agreement with Seqwater is that there's a 2.17% rise in bulk water pricing this year, and you'll see that our the council section of the water bill, or the bit that we control, we raised by 6%. So that led to overall a 4.7% rise in the average water bill for customers this year. A lot more forecasted in capital this year, so there's a $113 million forecasted increase in the capital expenditure. And one thing that we've also been tracking through last year, so in pretty much every report from mid-year that we submitted to committee, we talked about the fact that it's been a wetter than average year. So one of the things that really hurt our revenue side of the business was the high rainfall. We all saw it ourselves. I don't know, I certainly didn't have the hose out watering anything this year. I wasn't needing to fill up the pool. So when you're in that sort of scenario across the city, it really shows in our water revenue. So our water revenue was down, and the BOM is forecasting that this year could be another wet year. So something that we're watching carefully. When we get across to risk, and there's a slide later on that will show this as well, the 10-year capital program, as we've got it, is we need to reduce it. It is at a level that we don't think is sustainable, so we're really trying to focus that in onto our highest risk assets, and that's work that's undergo at the moment. We've got a watching brief on our hardship and affordability, making sure that that we can draw in the revenue that we need to draw in. More and more, the ageing asset base is becoming an issue. So we've got a lot of programs set up around making sure that our condition monitoring on our critical assets is strong. And there's some of the work that we do in this space I think is really industry leading. Term that we've spoken about a little bit, but I'll just reinforce, is a maximum allowable revenue, the MAR. So we're in a regulated, the water part of the business is regulated, so there is a maximum revenue that we can achieve. We're not at 100%, but we're getting closer and closer at 95.5%. So there's not a lot of levers we can pull on the revenue side if we needed to. We're up where we need to be. And the one thing that we'll always highlight in here is that we've got the continuing gap between what it costs us to service new development and what we get back in infrastructure charges. I could be up here talking about any of our networks and saying the same thing, but there is, for council, there's a continuing gap between infrastructure charges and the cost to service new development. So that continues to be a risk. Now, I'm going to get Victoria to run through some financials, and I'll come back to close out on some capital items at the end. Thanks, Vic.
Thank you, Mark. As Mark mentioned, my name's Victoria. I'm the Finance Business Partner for the Commercial Business Units and the Environmental Resilience and Heritage Department. So you've all been provided comprehensive end of financial year reports. So today I'll just be going through some key points, and please ask any questions as we go through these slides. So the Water and Sewer Commercial Business Unit didn't have a great year this year. However, it is important to note that we did still make $133 million in EBIT. However, this was $26 million below what we had forecasted, and the two main reasons for that are, as Mark mentioned, the wet weather. So we've had Cyclone Alfred. We've also had a lot of rain before Cyclone Alfred. In fact, we had 147% rainfall on the Gold Coast Seaway, more than the long-term average. So it was quite a significant year. And of course, with that, people use less water. We've had a favourable result in our bulk water purchases, and however, this has impacted the water usage revenue. The other main reason is the maintenance program. So as Mark mentioned again, we've got a critical assets team that's been stood up. There's a lot more condition assessments being done, and that's led into preventative maintenance program enhancement, and also reactive maintenance has also been key this year that has increased our costs. This is the cash P&L. So on a cash basis, we've made $267 million of EBIT. And this bottom part of the table shows you where that cash has been distributed. The biggest cost there, or the biggest distribution, was to the capital program of $207 million. The other important one to note on this slide, I think, is the net developer contributions. So we received $47 million in developer contributions last year in cash. We spent about $43.5 million, so that net amount of the 3.37 goes back into that constrained developer contribution reserves that's just used for trunk growth infrastructure. However, we had planned to spend $69 million out of that reserve, and instead we've had a higher renewals program rather than a growth trunk infrastructure program, and that means that we've had to draw out $60 million from our water and sewer reserve to fund that program. What this means for the city is $132 million was paid back to the city, and that's made up of interest and tax. The tax was less this year, and that's as a result of the lower operating income. I've prepared some financial ratios. The first one there is the operating surplus ratio. We're at minus 3.3% this year. Our 5-year average is actually minus 1.2%. So we have dipped below the target of 0% over the 5 years. So this is a bit of a concern, and we're looking at obviously improving that result next financial year and going forward. Our cash ratio is quite healthy, so is our leverage ratio. We have a very small loan from QTC, it's $15 million, so we've got plenty of money to cover our debt. And the asset sustainability ratio, as you can see, the 5-year average is 49%, which is below the target. However, you can see this year it was 81%, and next year we're forecasted in 93%, which just shows the contribution that we're making to our renewals program. And I'm just going to hand back over to Mark.
Anyone taking a question?
Yes.
Councillor Patterson.
Thank you, through you, Chair. And this might be for the EGM, of just back on that slide, the slide before. So I'm just curious about our targets for, so our overall city target, I believe, for the operating surplus ratio is...
it's an average.
It's more like 3% or something. 1 to 3%? 1 to 3%. So I'm just wondering why. Is it because we expect more expense in this area that it's lower than the city average? Why do we have a target here that's lower than the city average?
So the financial metrics that I have used is from the state government, and we're a Tier 2 organisation, and the 5-year average target for that is 0%. So I've used that in my analysis. I think Susan might be able to understanding.
May I just hear from...
yeah.
Thank you. I may just be remembering it wrong, but I was sure it was 1 plus.
It is correct what Victoria said in terms of positive 0%, but we aim for 1% for the city.
So we aim for 1%, and the Tier 2 target is from positive. 0 to...
Yes. Yeah, 0 plus.
0 plus, but our target is 1 plus.
Is 1 to 2% is our
1 to 2%.
Ideal position.
Okay.
In future years, though, we are looking to increase that to a higher percentage.
Okay, and so that's the whole of city target. Is there a reason why this target is different to the whole of city target? Because this takes up a pretty good chunk.
In terms of what was achieved for the current year, which would be 24-25, and then next year's forecast, so that would be 25, 26, is that correct?
That's correct.
So that is consistent with where we landed from a whole of city perspective. As you know, we had a negative operating surplus, but our target is always around 1% plus.
So my concern is less about the actual results and more about the targets.
Yes.
So this appears to be a different target to that whole of city target. So I'm just wondering why that is. That's all.
So I guess I would say that this is what the Treasury Department have set as the target for across all T2 organisations. However, as a city and ourselves, we have set our own targets. So I will update this to ensure that I'm in line with the city's target going forward.
Yeah, the through the chair, the 4.4% is in alignment with the target. So that's higher than what our actual internal city target is.
Councillor Doran.
Thanks. I don't want to derail your presentation, but I just had a question about what the EGM has just mentioned. The difference between the current year result on the OSR and the next year forecast is quite significant. Can you just step us through? Obviously, don't look in the past. The whole report looks in the past, but what changes are you planned to be able to reach the 4.4 for next year?
Sorry. So the 4.4 is a calculation that's based on what the internal budget is has been based on, and that is looking at a rainfall model that is across sort of 30 years, and we are already reviewing that. We're currently up to this month in front of our revenue budget. However, we are looking that there might be a La Nina event occurring that the BOM has predicted, and therefore we will likely have to bring that operating result down. So it's just a point in time. Now the budgets are set, if you can remember, when we're preparing the budgets in January, February of 2005. So sometimes this information is lagging.
Yeah, through the chair, I'll add, I don't believe the water CBU has historically changed the forecast based on weather through the financial years. So what we are doing, and you'll see at the quarterly review, based on a long-term weather forecast from BOM, they are already forecasting a wetter than average year certainly through to December. So that will likely have some negative impacts in terms of forecast. Obviously, with the water business, there's lots of variability around operating surplus targets, around operational maintenance, how our network performs, weather. But to Victoria's point, we're forecasting at a point in time, and I guess our commitment is to keep that forecast current and do a deeper dive each quarterly review so that we don't get to end of financial year and have major variances.
Councillor Patterson.
So I appreciate that even though you have great capabilities, you can't determine the rainfall for us. So I'm wondering if it might be useful for committee to just have some examples. So next year forecast is this based on long-term things. If we had the same rainfall as last year, it would be this. Mm-hmm. Just so we got a sense of how impactful that is. I mean, I imagine it could go from 4 to a negative if we had rain like last year. So I get it's an incredibly tricky one for you, but just for some context so we know how much of an impact that makes.
So through the chair, we do have a modeller who does this modelling, and he does do sort of 3 different models, one based on a heavy rainfall, one based on a drought situation, and then there's that medium. So we can definitely bring that through to the committee. Mm-hmm.
Councillor Wilkinson.
Thank you, Chair. And through you, just in relation to, we've touched on a little bit before about the reactive maintenance and that 18 million. I know the city is obviously taking directions to improve our asset conditions and looking at those types of things. But as far as these considerations with even next year's forecasting on the OSR, are they factored in as well as far as what, and if so, what level of contingency, I guess, are we placing on that? Or are we more or less a reallocation in a sense of putting it into maintenance and proactively rather than reactively?
Through the chair, when we presented the price path previously to council, which was endorsed, we did incorporate an uplift in renewal and maintenance activities, particularly around the sewer network. So we have accommodated what we're anticipating. The increase in asset condition assessment, technical condition assessment, not theoretical age-based remaining useful life, has really changed our investment profile. There's obviously been an uplift, so if you look at the asset sustainability ratios, we've been under-investing, arguably, in some of our networks. We're now correcting that for a period of time, and we'll bring that back to a sustainable level. But certainly in the 10-year forecast, we're looking for what we think can accommodate that increased level of planned maintenance and renewals. Do you have something to add, Mark?
Yeah, through the chair, if I could. Councillor Wilkinson, I'll come back to this in the last slide. There's a couple of data points in the last slide that I'll highlight that will sort of show where we're at as well.
I'll hand over to Mark if there's no further questions.
Thanks, Victoria. Through the chair. Okay, so we talked a lot about our capital expenditure and our major investments. There were 4 investment types that I wanted to call out. 3 were projects, 1 was a program. So our water main renewals, we've upped our water main renewals significantly and had a really good year with our partner in GCIS in delivering water main renewals, and that has been at a record level in delivering those renewals. Now, we've got 2 treatment plant renewals that are well underway. These are multi-year renewals, so this is Pimpama and Elanora. They're both in the field at the moment. They're both mid-program. When we talked earlier about some of the challenges around servicing growth, this is where that really plays out. So our expansion of all of our treatment plants to hit the growing size of the city, both of these won't be finished through to 26, 27, and then we'll be talking about them all the way through. They're big, expensive projects. One that is now Coombaba primary treatment area, that is now in commissioning at the moment. So it's accepting flows at the moment, and we're commissioning that asset, looking for full handover to the operations team in the very near future. But that's a great project to have done, because that really de-risks one of our key choke points as we come through the treatment plant, and we've now got capacity and some redundancy in there. So very happy to have that one completed. Now, just a slide I just wanted to talk to quickly, because I think Council know we're coming back to talk to you guys about this at the moment. But when we've done our budgets, we've ended up with some very high capital numbers. We're looking to come back and review what's in this, and we've got a proposal coming to some councillor workshops, and then as part of the budget update. But in this particular area here, you can see the capital budget there is really significant. Again, driven primarily by the treatment plant renewals I've spoken about, and some additional network renewals. Right,
Mark, will you accept a question?
Of course I will.
Councillor Young?
Thanks, Chair. Thanks, Mark. Just going back to that slide and that significant uplift in the expenditure on sewage treatment plants in particular, what kind of time frame are we looking for in terms of future capacity? Yeah,
so each of these stages probably bring around, depending on, it's not exactly linear. Things like the primary treatment area, I believe to be, many, many years. But when we're going stages, we're normally 10 to 15 years before we actually, bring one stage on and then bring the next upgrade on. I don't have all the exact dates with you. I can come back to you with it, but it's generally 10 to 15 years is about what you would expect out of a stage. So it's rare that we've got all 4 of them coming on at once. So that's causing the hump in the capital program at the moment.
Okay, so we're giving ourselves a 10-year growth capacity in these current investments.
Approximately. I would like to come back with the exact answer, and I'll circulate that to councillors.
Thanks, Chair.
Through the Chair, going forward, we will obviously plan to stagger these major upgrades. We have the challenge where all of these plants are at capacity within a 3 to 4 year horizon, so hence we've got an unavoidable spike. But going forward from an investment and investment profile flattening, market capacity and planning, we'll definitely aim to stagger those.
Yeah. And the one thing I will add on this, as we're bringing these treatment plant stages on, what it also does, it gives us enough redundancy in the treatment plant to do some much needed renewals. So a lot of the time we're actually adding the capacity, and then as soon as we down tools on that, we're jumping into doing a renewals on something that's probably past its time.
Does this, we discussed the potential of upgrades at Benoa and changing things through there. Does this include that, or would that be additional, or is this planning for that?
So through the chair, the answer to that is that that's in years further down the track.
So that's not even in this.
Yeah, and so we'll have a report coming back to council about the longer term plan. The planning guys are making some great progress on that project. So in the coming months, we'll be ready to come back and talk to you about what we think is the right project there. So
we could expect to see those numbers stay pretty hefty and high for a while then, I'd imagine.
Yes, certainly in the next few years of our capital program, it is very high in the water, but particularly the wastewater network.
Thank you.
Councillor Wilkinson.
Thank you, Chair. And just through you, just in that graph, is that reflective as well of what we've more or less set as a direction towards our Carrara STP as well? Is that factored into this, or is that a standalone project that has a different budget allocation towards it?
Sorry, which STP?
The sewage treatment plan over at where the green pad was.
Merrimack. Yes.
Yeah, Merrimack. Sorry.
Yes. So yes, Merrimack is 100% is part of this growth. So it wasn't a big project in last year. So this is a report that's looking at 24-25. In 12 months' time, when we're standing here, we'll definitely be talking about Merrimack. Okay. Important slide here. So this has been fairly constant for us. While I have been saying that when we're not getting full recovery from what we need to put into our plans for growth from what we get from our developer charges, it has been a steady source of revenue for the city. So the blue line are assets that have been created and handed over. The red line is the cash contributions from developers. And finally, Councillor Wilkinson, this is where I was going to talk about the overall performance of the network. So you see we've got a lot of metrics that we measure for the network, and there are two that are slightly conflicting here. So when we talk about total reportable incidents to the regulator, those are our bigger incidents where we have to report to the regulator. So we had 12 sewer spills as part of that 23 last year that were reportable. When we then look down I am looking for so the fourth from the bottom, total sewage main breaks and chokes per 100 kilometres. We're actually green on that. That's a fairly good result when we consider industry. So what that's telling me is that while on number we're okay, the severity of some of our sewer spills is higher than what we want it to be. So what we're trying to focus on with our work is not necessarily driving down the numbers of the spills that we're having, but driving down the severity of the spills that we're having. So this is a lot of the work that we're doing is focusing on critical assets, trying to make sure that we properly understand what assets are critical, where the incident may have an environmental impact, and making sure that we're spending the money in the right places in a constrained environment. Other ones that I will call out on this page are the second line item there, compliance with water quality guidelines 100%. So that's a fairly consistent number for us. But it's also the most important thing when you talk about what water and sewer professionals pride themselves on is delivering safe and clean drinking water reliably. So you can see that getting 100% on our water quality is a very good result. The figure above it is fairly good. The 0.78 there against a target of 3. there where we are still supplying safe drinking water, but the customer may have complained about a taste issue or a discoloration issue, or may have thought there was an illness that came from the water they were drinking. So we'll investigate those ones there and make sure we can close them out and confirm that the water was safe and within the Australian drinking water guidelines. Look, I think that's the main thing. That was on my last slide. So I think if it's okay, Chair, I'll open it up to any more questions on the water CBU.
Thanks, Mark. Questions from councillors? Councillor Wilkinson.
More of just a comment, if I could, Chair. I just wanted to say thank you. I think there's been an immense amount of work that's gone into this, and I'm thanking you also from a level of transparency with all your reports that have been coming through to the councillors even in previous times, noting that, of course, there has been some significant changes in our budget forecasting given the amount of rain that we have had, and obviously some of those reactive maintenance. But I think that it would be fair for me to say that that has been reflected, I think, well and truly in some of those quarterly reports, and I look forward to seeing more of those come through in due course. So just wanted to say thanks to the team for that.
Thanks, Councillor.
Councillor Doran.
Thank you, Chair. Mark, I just wanted to query one thing on page 28 of our report. It just talks about the actual, I'm just going to read it, the line, actual capital expenditure of 206.7 million represents a variance of the 14.97 million, or 7.8% above the revised budget. I'm just wondering if you could just step through, well, I mean, notwithstanding the revenue issues from water, we get that, but just wanted to understand what the difference was there. Was that a new project that popped up during the year, or escalations, and just how normal is it to overshoot the budgeted expenditure?
Yeah, so through the Chair, that's a little bit representative of the total capital result for the team, in that when we talk about the revised budget there, we've been trying to forecast, and we forecast through the year. We actually went down each quarter we forecast, and then in the end we've actually overshot our final forecast. So I believe that to be similar here, and what we've trying to do, one of the things that is very difficult to get a gauge on is project manager optimism. And often our project managers are very optimistic about what they'll get done by June 30. And sometimes we put in a adjustment that is saying, doubting them. And I think they've proved us wrong a little bit in this particular financial year. And a lot of the projects have been delivered. So more work was done than we thought.
Thank you. Just to quickly follow up that, so that the logical assumption, if there's not an increase in the project cost, is that that'll come out of the next financial year's.
Yeah, so what's been allowed for.
So it's not so much a new spend; it's just been brought forward into the financial year.
Yeah.
Cool.
Yeah, through the Chair, I'll just add. So we're running, I think, around 1,500 projects in the program, various stages from planning through to construction. With our total capital program, from the original 1 July, I'm talking all of infrastructure now, to final position, we're about 100 million lower with our final position versus our 1 July. But where we need to improve is, even though we were forecasting quite proactively and reducing our budget, or end of year forecast position and budget each financial year, in our Q3 we were too aggressive in our reduction. So there was around a 2%, 3% right across infrastructure overrun against our Q3 forecast, still well lower than our 1 July starting position. So we've put some more controls in. We're obviously strengthening that program management office. We're working closer with the finance team. So I think the rigour and ability to manage that, particularly, there's always that sort of hump we see at the end of financial year. In time, my objective is that we actually don't see that hump, because we'll have, forward programs, rolling programs. June should just be another month. We shouldn't see this big, increase in expenditure and then drop off in July going forward. But that will take a little bit of time to get there. But again, I'm confident we'll have a better forecasting position this financial year in that final quarter.
Okay, thank you. Thanks, both.
Councillor Young's been waiting patiently in the wings there.
Thanks, Chair. On the last table shown, there was a record of the incidence of unplanned interruptions, and the target is less than 80 per 1,000 properties connected. Do we have trends on that, please?
Through the chair, we do. I can't quote them off the.
No,
Yeah,
could you
but
provide
I could provide them, yes.
Also, there's a report mentioned in the report of availability of a listing of all remissions over $10,000 will be provided if requested. So I'm requesting that, please.
Okay.
Perhaps that should come to all of the committee at least, because one of those remissions is like almost $500,000. I think that's pretty spectacular.
Yes. As through the chair, so it was about $500,000, and it was the Arundel Country Club. So they've been going through. They've had a large water leak, and they've been reporting that throughout certain months, and they've been successful in applying for that. It was a sewer recharge that we gave back to them, and they're still trying to look to get their rebate for the water. So the application has been denied at the moment, and they've just had their sewer.
So is it their fault or our fault?
Do we need to move into close to go any further on this item?
I think so.
Okay. Would you like us to interrogate it now while we've got it open, Councillor Young? I'm happy to move into close.
I'm quite happy to ask the questions
offline
on the side, unless other councillors want to hear all that.
If we could, if the answers are available now, it'd be good to hear. Thanks.
Move a procedural motion to move into close, and I've seconded Councillor Wilkinson. All in favour? And we are moving into close to discuss. Live streaming back on. Just returning from a closed session discussion on a commercial in confidence matter, and we're returning to the further details of 6.1. Are there any further questions? Thanks, Councillor Hamill.
Chair, through you to Mark. I'm interested on the implications of prices of raw materials on the future forecasting of the budget still. It was something that was escalating a lot of our projects very rapidly over the last few years. So just what the general feedback on what the market looks like for that now, and are we still seeing as much variation in raw material costs that are affecting projects?
Through the chair, you may recall that we were talking about this a little bit earlier in the year when we were talking about some of our capital costs and where our capital costs were compared to some very aged budgets that we were holding. We don't have any of those really aged budgets that anymore against our big projects. But like, it is an ongoing concern about the cost of construction is still seems very high.
So still very high. Are we seeing it increasing still, or are we seeing a plateau now that's making it a bit easier to forecast?
I don't want to jinx it. It seems flatter than it was, not going out of control escalation, but it's at a very high level, and it's not coming back.
So, Chair, the other question I had was, so the other part that is leading into the future of all this is the open contracts that we have now, the GCIT contracts, etc., and what they were meant to do over a period to help streamline this out. So I was interested, one, on your general feedback on how that is going and the impact that's having on being able to forecast more accurately. But the second part I was interested in that question was, is there a danger if we don't get this program to flatten out the right level that we're going to wind those contracts up and those agreements up, deliver a heap of work, and then not have enough work to continue them, and we lose a lot of that professional knowledge and expertise that we're trying to build up?
So through the chair, there's two agreements, major agreements for construction work in the water business. So one is the IDP, which is the Infrastructure Delivery Program. So that's an agreement that we have with Fulton Hogan, and that agreement is primarily to deliver the treatment plant upgrades. So that one has a scope, and that will end once we've delivered the treatment plant upgrades. The other partnership is it still has a time frame to it, but it's an ongoing arrangement as we're looking for a maintenance and renewals partner. So that's the GCIS agreement. So I could see us in a long term, we'll obviously go back to the market at the appropriate intervals, but a longer term agreement to have a maintenance and renewals partner sort of into perpetuity.
Any further questions, Councillor Doran?
Just want to pick up from Councillor Hamill's query, and I may have missed the start of it, so if I'm asking you to repeat yourself, I'm sorry. Is the escalations due to materials, or is it mostly labour? Is it able to differentiate? Because as opposed to building a house, I'm assuming there's less.
Sorry, difficult question. It probably comes across to us just as a construction cost in the construction contract, and that has both in it. So labour seems high, materials seems high, but the distinction between the two, I'm not going to have a crack at that unless you are, Michael.
What I'd suggest, I'd be happy to bring back from our cost intelligence team some of the indexation and what's happening out there. There's obviously construction indexes and other lead indicators. So if the committee wishes, we could bring back maybe through the quarterly review process, where we can actually give you some intelligence, because it's a very relevant conversation to have around ongoing O&M costs as well. Because if we're forecasting on flat rates and elements, and we're seeing a disproportional increase in input costs, then it's something that we need to certainly understand as a council where the risks and opportunities lay.
It sounds like you're all across it. I think given the complexities in the labour market and leading up to the infrastructure spend to the Olympics, it's probably something that we'd love to hear more about.
Yep.
If you do come up with some information about it.
Can do. And sorry, through the chair, just in terms of Councillor Hamill's previous question, I think in terms of renewal program, there is a long-term, relatively stable renewal program budget. So in terms of GCIS or a future partner performing the same type of works, I think that is very predictable and relatively consistent as an investment, whilst the IDP investment for the STP upgrades is very much that 5-year spike, and then it will hopefully plateau off for another 10 to 15 years.
Councillor Hamill.
Chair, so while there's been a lot of focus on CapEx increase in this and then the differential between new capacity and renewal and the CapEx program, I was a little bit more interested in what the budget trend on the OpEx side of this looks like, because that's part of the reason why the renewal program has had to escalate so quickly, because there probably wasn't enough historically in the OpEx side of things. So was there some general commentary around what the forecast for that looks like and how we're going in better forecasting in that space to make sure our OpEx budget for this area is where it needs to be?
Yeah, so through the chair, one of the significant factors for the performance result less than target was that the reactive maintenance spend was higher than budgeted. So as part of the budget process this year, we have raised the budget. We're working with our maintenance team to try and make sure that we're not exceeding that, but it's a little bit out of their hands. Once the break happens, they need to go. So whether it be water or sewer, so we've got a greater budget allowance there, but I'm not expecting the impact of renewals on reactive maintenance is a very, very slow burn. So percentage wise, we're just chipping away at replacing our asset base. We're not, taking really large percentages and renewing them. So it'll be a slow burn to get our maintenance budget under control. But main thing for me is we're trying to make sure that we're really working on criticality. So I'd much prefer to have a higher number of low impact incidents than a small number of really, really big ones. So trying to work on that criticality.
Councillor, circling back to Councillor Wilkinson's opening remarks at the start of questions, I think that lent itself really well to an opening. Presuming you're happy to move the item, Councillor Wilkinson. Do I have a seconder? Thanks, Councillor Young. And Councillor Wilkinson, do you have any additional remarks to your opening? I'll echo Councillor Wilkinson's remarks. We've obviously been provided a great deal of reporting in the lead up to this financial statement. We've had state of the assets. We understand our ageing asset base, the effects of high rainfall, and developer contributions, and all the factors that have lent into the outcome that's been presented here today. So I think we've been all very well taken along the journey. So I thank you for your report today, and we look forward to next year and getting more and more accurate in that space. Is there anybody that would like to speak against the item here this morning? No? So Councillor Wilkinson, we have to accept that as a close. And I'll take that as a vote. All those in favour? And that item is carried. Thank you, Victoria, Mark and Michael. Moving on to item 6.2, we now have the Waste Management Services 2024 to 25 financial report, and I welcome Kathy Baker and Chris Owens.
Good morning, Chair. Good morning, councillors. Similar to the last presentation, I will share the presentation with Victoria, who is also our financial business partner for the waste business. We will touch on, similar to the last presentation, the financial results, but also the activities and initiatives delivered, capital program information, KPIs, so there's that wider context around what is going on and what's driving some of these financial results. In terms of an overview of the context of last year, a couple of features I'll touch on, and we've detailed those in the paper, but worth noting from the insights from last year is that continued gap opening up with the waste levy. So the price that the state charges us went up by another $10. So the money that went across to the state related to the waste levy is about $14.5 million. And at the same time, the rebate that comes back to us from state government is dropping as well, so that went down 2%. However, We have had our full cost pricing discussions over the last 2-year rounds of our special budget committee for the year that we are talking about here in 24-25. That was marked by a lift of 9.9% of our waste utility charge. So you'll see a slide that Victoria will present later in this one, and you'll see that that things are starting to turn around in terms of that gap between our reserves and our debt as well. So we're seeing some good shoots happening, and in the current year that we're in with that other lift in line with that full cost pricing pipeline, that is looking a lot more positive than the story that I brought back to you a couple of years back or 18 months ago. The other couple of features there are around some proceeds. We did sell 2 parcels of land this year, so we were able to build up some of our reserves. We did have to pay capital gains tax back to council, so not lost to outside of the organisation, but they hit our P&L this year, the capital gains tax elements of that. Tropical cyclone and the severe wet weather that we experienced in 2024-25 did have some material impacts. Particularly around leachate generation, the liquid that comes out of the bottom of our landfills, that percolates through that landfill, we pump that out, and we need to treat that at our sewage treatment plants and transport that. So some significant costs last year associated with that, as well as some of the volumes of materials coming through, particularly green organics during 24-25. Again, we don't charge our residential customers for that, and it does have a growing cost to process that through our processes. In terms of the outlook for 25-26, a couple of points there. I noted that widening gap between the waste levy charge that the state charges the council and our customers, but also that reduction of the rebate again. But again, this is modelled into our full cost pricing pathway. Offset to a large degree by our pricing that is current for this financial year. So again, we are aware of that and we are addressing that, and it does filter through to our models. A couple of other outlook for the current year. Green organics remains a concern. We've had some significant market issues with green organics processes. Southeast Queensland councils direct largely their green organics to the same processors. We had a major processor close for a period this year, and their operations, as a result of DETSI and council actions through the courts, and their capacity has been extremely reduced. So what we are seeing, the demand and supply market in play, so that those costs are increasing. We anticipate they will continue to increase, but I will sort of highlight that this market does highlight that council's decisions and considerations around the green organics facility purchase in Stapleton through the ARRC precinct did keep us ahead of the game. So we're looking at how that can actually offset our risks going forward. Another trend we're seeing at the moment is our bulky curbside service. You'll be aware that during the cyclone, we released 11,500 cyclone bags, as we call them. That's increased the profile of that service, and we are seeing a really strong demand at the moment. Our trend for the first couple of months is double what we anticipated. So we'll be talking to council in the coming weeks around how we actually deal with the costs associated with that accelerating customer demand, because it is significant. And in terms of risks going forward, I've touched on a couple of those, but those leachate treatment costs is a growing risk. Our volumes are large when we open up new landfill cells, as we have done in Stapleton Cell 7 and Reedy Creek Cell 0. That means that we get more percolation of rainfall if we have a wet year, which we certainly had, and we may well have another one this year, looking at some longer term forecasts. The volumes that we create increase. The costs of moving that, whether that's by tanker to our sewage treatment plants or via the sewage network, increase, but also the charges that have been applied. We pay, the waste CBU pays the water and sewage CBU to accept that material as a trade waste, and the costs of that volumetric charge is going up by 60%. So that's going to have a fairly significant impact on the waste business in the coming year. I will hand over to Councillor.
Councillor Patterson.
Just back on that slide, I just had a couple of questions, if I may. The first one was regarding the waste levy. I think we heard that we would now be able to explicitly note that as a state levy on our rates papers. Is that something that's coming in?
Through the chair, I'm aware of there's discussions going on our ability to do that. So working closely with our colleagues in the other departments to see if we can get that technology stood up. It is, my understanding, a really expensive exercise to do that. It'll record some coding. So I'll need to provide some further information by my colleagues on that aspiration.
And would that come through this committee, or would that come through the finance team to provide that, the rates team?
Madam Chair, could I ask Kathy to advise on that?
Through the Chair, we'll bring you back some information on that. It will also go through one of the finance committees as well, but because it's a waste levy, we'll show you an example of what the bill will look like if we can actually achieve it.
I think that would just be really helpful just for our community to understand. And then my second question was about the bulky curbside. So are we, I think you said we're going to have another report back on that and the expense and when we do that, could you also provide through the chair just to look at what it would, how it serves comparative to the old model where we just had the pickup on the side of the road? I'm wondering if there's something about this model that's making it kind of more attractive for people to take these things on. So I'd like to understand that.
Through the chair, certainly we can revisit that. We did have a presentation scheduled to committee in November, and that was really more about keeping you up to date on how this new tender's going and the expansion and those sorts of things. But I will use that opportunity to talk about how the trajectory of cost is going at the moment. But one comment I will make in terms of the value proposition for customers on our current model of the FlexiSkip blue bags is that on demand, and that's a pretty unique one, that if you need one in February, you can get one in February. If the routine typically is in September and you don't need it. That is the major difference between those two models, and one that does make it really attractive to our customers.
Well, it does, but it also means that we've got an additional expense where if people kind of planned for that before, so it may be good for some, but for a lot of our pensioners, it may be a more frustrating model, that this was a service that they kind of expected was covered and part of, and if we're looking to a model where it's user pays, and anyway, thanks.
Councillor Gates and then Councillor Wilkinson.
Thanks, Chair, through you. I'm looking at page 79 in the 25-26 outlook. I just wondered in the bottom point, the waste and recycling gate fee activation preparations, will that include funding for the additional illegal dumping that might be expected?
Through you, Madam Chair, I understand a paper was brought up to committee, not our committee, but which other? No,
it's coming to planning and regulatory round.
Okay, thank you, Councillor. So there's a detailed presentation coming on that from our colleagues in the city compliance, and that outlines the preparations that they're going to make. So they are proposing some additional staff and some additional funding, as well as some more communications out to our customers around that.
So this is over and above information we were given at budget when we made the decision to support gate fees?
Through the chair, I'm not aware that there's anything additional in there. I reviewed the paper last week, and it was more about reallocation of officers to pivot them around onto, to expect in that first 12 months potentially a spike in the volumes of illegal dumping.
Okay, because my recollection was at budget, it wasn't suggested that that would be a big impost.
Through the chair, based on the papers we did at the budget, we'd done some analysis comparing fees being introduced at other local councils, and that didn't indicate that there'd be a significant increase in illegal dumping. We already have illegal dumping across the city as it is. The research that they'd done for that did not suggest that there'd be a substantial increase, but the P&R guys are going to pivot just in case.
Thank you.
Got Councillor Wilkinson and then Councillor Patterson.
So on this, I appreciate what you're saying, and the reports suggested that, and that's the recommendation to come to council. But I'm also aware that at the same time, our compliance team were very concerned that they totally expected that this was going to result in additional costs and resources for them. So I'm a little bit, I suppose, concerned that one half of that information came to that recommendation, which would have us support it without that consideration of the second part. I have a question with this. Given those costs that we are going to see on that compliance, is that going to be directly funded? Will there be an allocation through the gate fee that effectively pays to the other department, or is that just a new cost that the city absorbs generally?
Through the chair, a couple of comments on that, Councillor. If we proceed with a $5 per visit gate fee at our WRCs for our residential customers, modelling suggests we'll bring in revenue to the degree of about $3 million potentially, depending on if behaviours do change, if people visit less or more or differently. That at the end of the day, the waste business pays a dividend back into council as part of a commercialised business unit, so we can recover additional costs via that mechanism through our budgeting process. Just to unpack a little bit more what Cathy has suggested, we don't anticipate significant spikes in illegal dumping. We do anticipate a lift in it, and that's been the experience in other councils when we did the research around this one. There will be additional costs associated with that. It may well be a pivot around in terms of those officers spending more time looking at illegal dumping and following that up. Certainly within a communications budget that we have going at the moment, you will see towards that last quarter of this financial year more public information around that. But we do want to change that public behaviour, because at the end of the day, $5 is not a huge amount, and we have illegal dumping right now even with free tipping, so it's a community behaviour thing that we do need to change and muscle up to get that being seen as unacceptable as littering out there in the community.
Just to follow up, so with the additional costs that we are now anticipating and the compliance team are preparing for, will there be some kind of transparency through this process, through your department, in terms of what those unintended costs are? Even though I appreciate you've got a dividend and goes into general and it will pay for it, but I just want to see that it's really clear that, okay, this happened and then we had these changes, and then that's noted here as well as in the compliance department.
Through the chair, when we increased the number, when we did our rollout of our green organics bins, you recall that we put back into our monthly report some contamination monitoring, just because it was so topical and it gave you, the finger on the pulse in terms of how things are tracking. I'd be more than happy, and I'd be tracking this pretty closely regardless, but putting that in the monthly financial report to be able to look at, what our illegal dumping costs are happening, so we can have a monthly review of how that's going. So if that would satisfy Councillor, I'd be more than happy to arrange that for next year once this goes live.
Thanks, Chris. Councillor Wilkinson, I know that you're waiting patiently, but do you mind if we have another question on this matter, and then we'll circle back to you? Thanks, Councillor Hamill.
So, Chair, just a clarification, the report that's coming to Planning and Reg is not purely on the activation because of the gate fee. It's on illegal dumping in general, which is what the report called for, because it is important to look at the matter holistically, because the vast majority of illegal dumping that happens in the city has got nothing to do with our waste recycle centres. It's to do with unit developments or townhouse developments typically. So just wanted to clarify, the report is illegal dumping holistically, but it does have specific sections on how the regulation team intends to pivot to handle the anticipated spikes that occur as with the other benchmarks, just so that there's no surprises when that report comes up in a round or two's time.
Thanks, Councillor Hamill. Councillor Wilkinson and then Councillor Young.
Thank you, Chair. And through you to Chris, just in relation, you touched briefly before on the reportable environmental incidents reported to the regulator. I know that we, again, this year have sat a little bit higher than our intended target, noting that it is still down from the previous year. But as a question, I guess, on notice, are you able to provide us with some further detail, perhaps maybe on the last 5 years, how we've sat on that? I'm just trying to work out if our target perhaps is either too low, or is that a target that's, is a kind of one that we've chosen, or is it one that's set upon us to meet, just because we're sitting above it by basically double, and that's where I'm now just seeing a bit of a trend over 2 years. So any insight you can give me on that, and I know some of the incidences that are noted in the report here, but I wouldn't assume that they're the same things at the same sites necessarily, but even if that information's available, that would be something I'd welcome.
So through the chair, certainly, I guess that one philosophy of these exceedances, if you like, or incidents that are reportable, whether they're treated by the regulator as to be followed up as an exceedance against our environmental authorities, is that I'd prefer them to be zero. And we should be aiming for zero, and our people aim for zero. I think what we have in that one is a more realistic one, and that's reflective to a degree of the nature of our environmental authorities at the moment. So those 7 or 9 that are reflected in our KPI report there are largely, or not largely, but they are around in the last 12 months around gas exceedances. So we have strict levels on our landfills, but also our groundwater exceedances, including groundwater levels from our closed landfills that are, in some cases are unlined. Now, we have conversations scheduled with the regulator to not just look at those sort of broader environmental authorities keeping up with changes, but are some of the levels in there, are they appropriate, if I could say that? Because when we report those, particularly the gas exceedances in nearly all cases, the assessment goes ahead. They're seen as very, very low risk, to the point where we're creating work by reporting them. They have to assess those, and the conclusion is no, really low risk. So my question is, do we really need to look at those numbers again? So there's a couple of levers we can pull there as well. And Kathy's background may well want to chime in.
Yeah, through the chair. Like for example, the gas ones that Chris was talking about, the environmental authority just has a number for a compound. However, we also measure pressure when we do our gas measurements, but because the EA does not say it has to be above this number or below this number and a positive pressure, we report the number. However, if it's negative pressure, it doesn't mean that there's an issue. It's just above the number and there's no concerns. The other issues we have is the EA, actually the environmental authority, says you cannot burn waste. So the minute we have a fire at a landfill, we have to report it. That could be a small, tiny fire that we get out within 10 minutes, or it could have been like that raging fire in the landfill next door that went for months and months and months.
Not our landfill.
Not our landfill, the landfill next door, the private landfill. So there's some conversations that we're going to have with the regulator around that. Is it reasonable to report? Because we're reasonably open. We're open and transparent with the regulator. If the EA says this, we will report it. We're having that conversation around, is a small fire that's contained within 5 minutes and no smoke goes off site, is that a reportable fire, and can we change our environmental authority conditions to reflect that?
Councillor Hamill?
Chair, I don't need detail today, but I'm interested if Chris could let us know when we're expecting the next paper on the ARRC contract.
Through the chair, that will be next committee. It's being worked on right now.
Just to say, I love it when I see the word rebaselining. That doesn't make the hairs in the back of my neck stand up at all. My other question I had, Chair, was so in the 25-26 outlook, it talks about affordability and deliverability review. So while the water business was more talking about the affordability lens, deliverability is mentioned in this one. So if Chris could provide a bit of context of the deliverability element of that particular bullet point.
Councillor, through the chair, I wonder, I've got a slide on capital program.
Slide. Look at him.
So maybe we can unpack that a little bit, and we can look at what we delivered last year and what that tells us about what's coming up for the current year, if that's
all
okay.
All the answers today.
Councillor Young.
Okay. Thank you, Councillor. Look, I'll hand over to Victoria for a moment to, I hope that's provided a bit of context, and Victoria will talk a little bit more numbers.
Right. This is the waste accrual P&L and the cash accrual all on the one page. So the waste business for the year took 11 million in EBIT. This was roughly 15 million below what we had forecast, and this is due to a landfill remediation adjustment of 14 million that had to go through the books. It's a non-cash item, but that's what's affected that at the end of the year. On a cash basis, the earnings before interest was 24 million, and you can see how this has been distributed. So I think the biggest things to note here, we've had the 2 sales of land. This has led to us being able to provide 30 million back into the waste reserves. So we've had the Tugun landfill sale, which Chris touched on, and another piece of our Mollendina site to the Coomera Connector. And as Chris also mentioned, that means that we've had to pay capital gains tax equivalents. Please ask any questions as we go along. What this means to the city is we provided back 22 million, and majority or the main variance to that is that capital gains tax there. You can see it was in the realms of about 8 million. I can provide update on the special dividend if anyone wants to go into that. Otherwise, I can continue.
So,
yep.
Is any of that money held in waste reserves to offset increases in costs and lower expenditure in future in the waste business?
Yes, so the waste reserve had a transfer of 30 million back into those waste reserves.
Okay.
So as well as that, we've also provided 22 million back to the city. So that's on top of the 30 million that's been squirreled away into our reserve,
Great.
if you like. Yep. That special dividend back to the council was for the green bin rollout that happened in 23-24. So the waste business had come to the council and said that that we wouldn't be charging residents for the green bins for that year. However, that wouldn't be a cost to the city, and that 2.26 million there represents the tax that would have been paid back to the city had we received that revenue. So it was foregone revenue. Okay, and this was the slide that Chris was referring to before. It's the good news slide. The top graph here shows what our current outlook is, and the bottom graph was what it looked like last year. So you can see the difference in those lines, the red line being our waste debt balance and the blue line being our waste reserve balance. So that gap is definitely closing, which is a result of our, looking at our sustainable future. And the landfill remediation adjustment. So we've got a liability to make sure that we remediate our landfills 30 years post-closure. This liability had to increase this year by 14 million. And that's a direct result of the leachate. So we had an increase in leachate volumes, but we've also had a price increase in our leachate treatment. So that's for this financial year. So for 25-26, the leachate treatment rates will increase by 61%. And of course, when you look at that over the next 30 years or more, that has resulted in quite a big number. So the 31 million there is has been discounted back. Net present value is our 14 million increase to that liability. If there's any questions,
Councillor Young.
Yeah.
So the leachate, I'm a bit ignorant about it. So if that's the water that accumulates at the bottom of the landfill and has to be pumped out?
Yes. So I think
there's extra costs in pumping it and then treating it.
So the extra cost in this instance is just the treatment at the sewage treatment plants.
Yeah, that was my next question.
Yes,
Where does it get
so it's an internal charge. It's between our water and sewer commercial business and our waste commercial business. So the leachate, depending on what landfill it is, can either be pumped out to the sewage treatment plant or for Stapleton, it has to be trucked. either to one of our facilities or to like another facility to treat it. It's best if it goes through our facilities because it is cheaper.
So that appears as a charge here, but does obviously then that's going to appear as an increased revenue.
That's correct, Councillor.
Sewage side.
Yeah.
And through the chair, it is worth noting just how those two business units integrate. So, for example, if we've got through the wet season that we've just had, we had an extreme volume of leachate being created at Reedy Creek, and normally we pump that through to Merrimack Sewage Treatment Plant directly through a pump station. It was constructed a number of years ago. The capacity of that sewage treatment plant needs to be balanced with the volume coming in, so we do assume increased costs to the waste business by the need to be able to tanker a portion of that to Coomera, which is bigger, has a new stage just set up to be able to absorb that without interfering with the treatment process. But what that means is that tankering, putting that stuff on the road, increases our costs significantly. So we do have to work closely with our sewage treatment plant colleagues to get that balance right so we don't disrupt that plant, risk their environmental authority breaches, but try and do it in the most cost-effective way. And there's a lot of work going on right now on a sort of risk basis to get that balance right.
Thank you.
Councillor Hamill.
Chair, I was interested specifically in the impacts of the leachate from Stapleton, and that's a significant escalation in leachate management, and a big chunk of that is from Stapleton. So what kind of impact does that have on the timing of when a Stapleton STP comes in, that massive increases in the leachate side and having to transport that down to Coomera to be treated versus bringing forward Stapleton STP or where that fits in the program?
Can I call on Mark to come in and answer the Stapleton treatment plant?
Do you need the question again, Mark?
Through the chair, apologies for the lack of jacket. Richard Ellis has borrowed it off me. So Stapleton SCP, we have an agreement with Logan City Council at the moment for a number of years, and with long-term extensions. So we're working through that at the moment with Logan, trying to work out what is the best answer for the city. So we know that the catchment at Stapleton will always be highly industrial and will be a difficult catchment to treat. At the moment, I suppose the most likely answer is that we will, in the short to medium term, look to continue with Logan, but we need to work that through and finalise an agreement. And so the Stapleton STP is probably not a short term in my mind.
Yeah, so Chair, probably missed the context of my question. Was I am aware of all that and I'm aware of that modelling, but costs in increases to deal with leachate escalating like this is going to change that model fairly quickly. So has that been calculated into, so maybe instead of a 10-year agreement with Logan, we're going to do a 5-year agreement to give ourselves the flexibility to maybe bring Stapleton forward? Yeah,
so the primary thing that Logan need to understand from the city in the agreement is what capital does our flows going to Logan trigger. So at the moment, in the first part of the agreement, we are paying our share of the capital for the transfer from the old Beanley treatment plant in Eagleby across to Loganholme. That will be paid off within the first 10 years. So, and that's not something that is, I suppose, subject to strength of the sewerage. What the agreement has, it has a factor in it called the sewerage strength factor. That's a measure of the COD, the chemical oxygen demand. The stronger the sewerage we send, the more we pay as a treatment cost to it. The numbers still look favourable, even with a increasing strength of sewerage going across to Logan.
So, and I'm not aware of this one, but we can't send leachate across to them, can we?
It would be by agreement. It would be, they would need to understand the overall concentration of the flows that we're sending across. And they would be looking at it from where their licenses are. Logan Home is a fairly big treatment plant, so they may have capacity depending on which particular compound or chemical in the leachate is causing the concern.
Yeah, just so that, Chair, that question was in the context of, because the biggest cost in that is the logistics of transporting in the first place. I would be interested to know that, and that can be offline to understand that better of how that's calculated in the impacts of that.
Yeah.
In a timing, because it's the cost of putting in a truck and transporting down the Coomera is just going to keep going up. It's the treatment end of it's not the expensive part; it's the putting in a truck and getting it there.
Yeah, and certainly from wastewater point of view, Merrimack is struggling to handle the leachate at the moment and stay within licence. We're similar to what I was talking about going to Logan Home. Coomera is a big plant and has more capacity to absorb.
Through the chair, I think it's a good question and the right question, given the logistics and the volumes and the gate fee from Gold Coast, the council. We need to have a look and enter into those discussions with Logan Home to see if, even if we could supply a portion of that without spending too much money on infrastructure, it is worth looking at. I know that Logan Home receive leachate through from their Browns Plains landfill and have a trade or a type of trade waste agreement for that one. So it's not something they're unfamiliar with. But we just pretty much need to do the maths on CapEx and OpEx if we do a split at least. Not that we've raised that yet with Logan.
Thank you, Chair.
If there's no more questions, I'll hand back to Chris.
Thank you, Victoria. Councillor, you mentioned before about our CapEx and our deliverability. I'll just touch on what was delivered last year. So $27.85 million worth of capital works was delivered last year. A major chunk of that was the Reedy Creek Cell Zero construction, was the biggest project on our books, and that stage one is now open and is being filled. We had to redirect JJ's trucks in there to do that bottom layer so we don't damage the liner, but that's underway. That was a really long-term project with a lot of permutations around where it would be located, what it receives. So we really had to get cracking on that one and delivered it with our delivery partners and Infrastructure Gold Coast. In terms of deliverability, probably three themes I think relate to that, and we have learnt this year and half of the year before around what triggers and what strategies we need to do to improve deliverability of the waste program. Probably the key one for me is the Waste Infrastructure Delivery Program, the contract that's set up, and Hazel Brothers are our partners. So therefore, instead of us going out to the market for every project, and these are sort of pretty big civil works projects when we're talking about particularly landfill cells, that we have that relationship and provide that pipeline of work so they are geared up, they have the right team, they have the right equipment, and we keep rolling with that one. So that's been running for almost a year now. So I think that's a real asset to our business in terms of deliverability. I think the other element that my observation is that Infrastructure Gold Coast delivery team, their waste infrastructure delivery team, and our planning team, which sits in an EHR, so our waste infrastructure planning team, are in essence co-located. So they're joined at the hip. So I saw symptoms of sort of, I guess, dispersed decision making, and actually having them working together has made that process a lot more efficient, but stopped U-turns and dead ends, so they can make some real deliverability as well as design decisions as we go, so that they don't hit a barrier like we did at Mollendina, whereby we went out to a consultant, got the designs for a sedimentation treatment pond at the old closed Mollendina site, but when the Infrastructure Gold Coast team came in to look at the delivery of that and looked at the easement around the power lines there, they realised it just was not feasible. So again, we had to pivot and redesign that. So those sort of scenarios really impact on deliverability. So again, co-locating, getting those teams working close together has been really important. I think the final one there is around master planning. These facilities, whether it's landfill with all the different cells, with the leachate tanks, with gas extraction infrastructure and stormwater treatment, are a real puzzle on how they fit together. We are 2 weeks away from releasing the new master plan for Reedy Creek, and about probably a month away or 6 weeks away for Stapleton, because what tasked the team with was go back, work this out, because we need to know exactly how this is going to play out and how it works, works with ARRC as well, so that we know what is going where, so that we're not sort of redesigning and moving things around just to get some stability there. So for me, they're the three key themes of deliverability that we are either on top of or in flight.
Through the chair, the other thing around deliverability that Chris sort of didn't touch on, when we have rain, our cell constructions become an issue. And so, so if we have wet weather, we have to really plan around rain when we're doing cell construction and the said basin constructions, because we need to make sure that we're still operating an active landfill while trying to build new landfills, and we don't give ourselves an uppercut by making a landfill with a cell that is just leaking because it's not fully finished when the rainy season hits.
Yeah, and 24-25 was diabolical with this. I mean, not just the cyclone, but the severe weather events was extraordinary when you consider the bulk of this work is bulk land earthworks. The call out to Paul Faulkner and Michael's infrastructure delivery team, they have just powered through this. So the volume of work that they've got through to get these jobs done in that has been really, really impressive, particularly at Reedy Creek and also at Pimpamar as well, the works they've done there. So my background with the water and sewage business hated the drought, but I think I'd like to see a little bit of dry weather for a year just to give us a bit of respite. And just to wrap up, our outlook in the next year, the current year, again, deliverability is the right question given that spike there. I will highlight that is under review at the moment as a broader sort of review of capital works and operational costs at the moment. So it is likely that will drop materially, and we'll sort of come back to council on that broader program in the coming weeks, I understand. And finally, similar to the water and sewage CBU, we have our key performance indicators which go in our annual plans. I'll call out a couple in there, but happy to talk to any of them. We've touched on that first one, which is around the environmental compliance and the number of events which have the potential to cause environmental harm reported to the regulator. And again, I'll just highlight that doesn't necessarily mean we have a breach and a follow-up action from the regulator. It means that where we think we've got a concern, we report it. We are absolutely transparent with our regulator, and that is the only way to work with the regulator. In terms of the post-customer call satisfaction, again, really high with the waste, and that's largely thanks to our customer contact centre and the business services broader team there that do our first line of customer interactions when they call in for a missed bin or a broken bin and those sorts of things. So the customer satisfaction levels are fairly high. And probably the bottom two to draw your attention to, the percentage of total waste recycled or recovered. Again, part of the key driver, or one of the key drivers of the business, is to get that resource recovery percentage up. We had a reasonable year last year. That was off the back of we did move a lot of metal stockpiles as well as concrete stockpiles as well. So we did get a bit of a sugar hit with those two commodities and just really ramping up the production and movement of those through our contracting partners. But again, below our target and still quite low. And also, again, justification of where ARRC fits into the scheme of things to get that recovery rate even higher, or at least our diversion away from landfill even higher. Finally, that last one, one of the first years I think we've gone beyond the green, which is the percentage of missed collections from total services. But I will highlight that that included the period of the bin rerouting exercise, so the biggest we've done for 20 years. And also we stood down for a couple of days, you'll recall, during Tropical Cyclone Alfred. So to actually hit that number, I'm really, really pleased with the team and JJ Richards to be able to get that close given those challenges they had during the year. So I personally am not losing any sleep over a yellow score for that one rather than a green.
Thanks, Chris. Councillor Hamill. Seconded by Councillor Wilkinson. Would you like to open debate, Councillor Hamill?
Chair, just to kind of wrap up probably my thoughts on this item and on the previous water one, that there's a common theme between both items today, that both programs have got significant increases in budget forecast, and that we've been very clearly told today that it is unsustainable and unachievable for both programs. I think we need to call out that big increase in programs is driven by a historical underspend in both these areas, and it's now trying to catch up on that, which comes with a lot of challenges of how we get that right over a longer term period, and that significant challenge of affordability and deliverability on both these programs. It's not a small task, and one that's going to require a lot of attention to this program, not just this year, but for a lot of years to come. I think just in the waste business, Chris made the point of calling out ARRC, but there's a range of other things to happen in this business still that are going to add to that challenge. That'll be, where do transfer stations and bulking stations fit into this mix? Where do MRFs, bulking stations, the cost of those environmental controls, like that leachate control increase this year is huge. While our landfill remediation costs in general have gone through the absolute roof in the last 5 years, to see just leachate control jump like that is concerning. The simple fact is we have no choice but to do it, and it's money that has to be spent, and it's money you don't make anything out of. It is just millions literally going in water down a pipe into a sewage treatment plant that we've got no choice but to do. So just to call that out, that's I take a pause on both the reports today of what it shows of the massive spikes in all those graphs should cause all councillors just to pause on what's projected in there. We've got the workshops coming up of how that gets levelled out, but that affordability and deliverability piece is going to be very, very interesting, and how we make sure that what are the critical things for our city to provide to our ratepayers, that we don't put ourselves in a further hole with this in a decade's time, that we spend the money over the next 5 to 10 years to set ourselves up for the decades ahead. Otherwise, it could be very concerning if we don't.
Thank you, Councillor Hamill. Would anybody like to speak against the item? Councillor Hamill, you're happy for me to take that as your close? And with that, I'll take the vote. All those in favour? And that is carried. Thank you, councillors. Well, what we're going to do is we'll move on to the items in 7. Once we move into close, we might take a short comfort break, but just to move along seamlessly. Thank you very much, Chris and Kathy, for that one. So next item in the closed session report, 7.1, is Security of Critical Infrastructure Act 2018 annual report, which requires a presentation in closed, due to be kept confidential under law of a formal arrangement with the Commonwealth or state. Can I get a seconder for moving into close? Thank you, Councillor Young. All in favour? And that is carried. And just given we've been going for an hour and a half, if you'd like to take a turn. For those tracking along at home, we've just had a presentation on 7.1 and a number of questions answered by the officers. The item is going to be moved by Councillor Patterson. Do I have a seconder? Thanks, Councillor Young. Would you like to open debate, Councillor Patterson?
Yes, thank you. We've just had an excellent update, and the transparency and the context. So having us really understand the move in legislation on this. It's an issue for all of Australia to be considering their assets and making sure that we're protected. I think I'm just looking at it. So this is a confidential item, but you can see there that the council approves the annual report for submission to the Department of Home Affairs. So this is a matter of national protection and significance when we're looking at our assets. I particularly thank you for your candour as well. You know, looking at what we did, and again being in open, but it gives me much comfort that this is getting handled. So thank you.
Thank you.
Thanks for those opening remarks, Councillor Patterson. Would anybody like to speak against the item? No? Would you like me to take that as your close? And with that, I'll take the vote. All those in favour? And that is carried. Thank you, Justin and Chenwei. And thank you to Michael's team. Councillors, the next item on the agenda is item 7.2, which is our Advanced Resource Recovery Centre ARRC Energy Delivery Model. And I welcome Kathy Baker to return to the stage with Grant. Councillors, this is another item that is required to be presented and discussed in closed because the matters relate to commercial in confidence. I will move that we move into closed, seconded by Councillor Hummel. All those in favour? And that is carried. Live streaming off. Live streaming is back on. Welcome those viewing from home. We've just returned from a closed session discussion with lots of robust questioning. The item is enclosed as confidential in nature, so I won't go into too much detail, but I thank you again for the workshops in the lead up to this. We understand that it's a lot of work and a lot of thought that's gone behind the proposal that you have provided for us today. I think it's the right direction. I'm supportive, and I'm looking for the support of my council colleagues here today so we can move along this project and get this much needed solution in for our city and for the region. Is there anybody that would like to speak against the item today? No? Well, we'll leave that. Would anybody else like to speak for the item? No, I'll leave that as a Councillor Young.
Yeah, it's a very significant project, obviously, and there's lots of contentious elements to it. I think we've got good guidance from Grant and the team that he's assembled and the advice that he's receiving. I do have a concern about the vulnerability of the project in the future to where we might be exposed to relying on negotiations and advocacy, because we've had a lot of failures in that department in big projects in the past, and there's a vulnerability to state government changing its mind in legislation and regulation, which will potentially impact the project. But we're doing as much as we can, I think, to be alert to those issues and to provide the proper response and flexibility, and so I'm going to support the project. Thank you.
Thanks, Councillor Young. With that, we'll take the vote. All those in favour? And that is carried. Oh, yes, we did have a seconder. Oh, okay, perhaps we didn't. Let's just do it again for formality's sake. Councillor Wilkinson was the seconder for the item. All those in favour? And it is carried. And that was carried unanimously. And that brings us to item 8, which is general business items. Is there anything that arose out of today's meeting? No? Well, we'll take that as a close of the meeting at 12:21. Thank you for everybody's attendance and robust input.